Hey guys, welcome back to the channel. My name is Mandeep and you're watching LLA English. In my last video, I talked about digital gold and how it is a much better investment compared to physical gold if you are buying gold, of course, for investment purposes and not for consumption purposes. Well, in this video, I am going to show you how gold ETFs and gold mutual funds can be an even better investment option of golds compared to digital gold. You can not only save all the costs involved in physical gold, but you can also save your 3% GST and the spread that I talked about in digital gold. After all, it's about saving as much money as we can because you know I am Minded Mandeep. So let's quickly jump in and understand gold ETFs and gold mutual funds and answer the burning question: which one of these should you buy, as well as which gold ETF or which gold mutual fund is the best one to invest in. Before you can understand gold ETF, you must understand an ETF. So an exchange traded fund, as the name suggests, can be sold or bought on an exchange just like you buy stocks. But it behaves just like a mutual fund. A mutual fund will take your money and invest in several stocks or multiple asset classes. Similarly, an ETF will also take your money and invest that money in multiple stocks. But it cannot pick stocks like other mutual funds. It doesn't need to be managed actively. It will always track something. For example, it can track an index like Nifty 50. Nifty 50, as you must know, is made up of top 50 companies of India according to market capitalization. And all those 50 companies hold a particular weightage in Nifty. For instance, Reliance makes up for 12% of Nifty. So a Nifty ETF will take your money, invest your money in those 50 companies proportionately. Similarly, a Sensex ETF will invest your money in top 30 companies that form Sensex proportionately. This means a Nifty ETF will generate equivalent returns to what Nifty 50 will generate. If Nifty increases by 5%, your Nifty ETF will also increase by 5%. And it will keep tracking Nifty. So ETFs are a great way of investing in stock markets if you are a beginner. Let's say you lack the ability to fundamentally analyze every company and decide which stocks to buy. So you just put your money in Nifty so that your money is invested in top 50 companies proportionately. And if you believe that Nifty is bound to go up 10 years from now or 20 years from now, then your money will also generate similar returns. By now, I'm sure you've understood that you must need a demat account to buy an ETF. But what if you don't have a demat account? In that case, you can invest in index funds, and those are available in your mutual fund app. So multiple AMCs will offer you their own index funds. For example, Aditya Birla Sensex Fund or Nippon Nifty Next 50 Fund. So all kinds of index funds are available right in your mutual fund app. And they'll behave just the same. They will invest your money proportionately in the underlying index. So now you have understood what ETF means. Try to think about what could a gold ETF mean. Simple, it will take your money and invest in gold, and it will keep tracking gold prices. So the money you invest in a gold ETF will behave like you have invested your money in real gold. And not just behave, it is in fact real 99.5% purity gold. So whatever returns gold will generate, a gold ETF will mimic those returns. And of course, if it's ETF, it will come in units, and 1 unit of gold ETF will be equal to 1 gram of gold. So gold ETF, as the name suggests, exchange traded fund, will require a demat account for you to invest in one. And usually, many brokers will charge brokerage if you want to buy a gold ETF or stocks for that matter. Which is why I love using Zerodha as it's India's #1 discount broker, and it doesn't charge any brokerage for deliveries. Deliveries mean if you buy something and hold for more than 1 day. So you won't have to pay any brokerage, and its user experience is best in class. Let me show you. If I search gold in my Zerodha's Kite app, I will find a number of gold ETFs to choose from, and I'll tell you which gold ETF is the best one for now. And usually gold ETFs will come in units, and 1 unit will be equal to the price of 1 gram of gold, and some AMCs have managed to break it down to further units. So you won't have to spend 5,000 or 4,000 rupees to buy 1 unit of ETF. Let's see. Let's take Nippon's Gold Bs for example. 1 unit of Nippon's Gold Bs ETF will cost you just 43.62 rupees as of making this video. So that's how we can buy gold ETFs via Demat account. Just click on that buy button. So I'll leave you a link to open a Zerodha account in the description, and if you use that link, you'll be indirectly supporting this channel, and for that I thank you in advance. Now let's talk about gold funds, or what we call gold mutual funds. They are nothing but gold ETFs in disguise. A gold fund will take your money and invest in gold ETF. It's that simple. But people can invest in gold funds even if they don't have a Demat account. They can do so via their mutual fund app. But that's just not it. Gold funds are a bit more expensive when compared to gold ETF, because now there's a mutual fund that will charge you expense ratio, and the ETF where the money will ultimately go has its own expense ratio. But still, gold mutual funds and gold ETFs both have their pros and cons, and you really need to know the difference between them before you can decide which one of them to put your money in. So let's take a quick look at this table that I made for you. So I'm comparing gold ETFs with gold mutual funds on certain parameters. First one is how you can buy it. For gold ETF, you will obviously need a Demat account, but for gold mutual fund, you will need a free of cost mutual fund app that is linked below, and chances are you already have a mutual fund app in your phone and you can just use that. SIP. If you are looking to do an SIP in gold ETF, sadly it's not possible. SIPs are only available in mutual funds and mutual funds app. Minimum investment, as I told you, usually a gold ETF will come in units, and 1 unit can go up to 1 gram of gold, but AMCs have managed to break it down to smaller units. So usually gold ETFs minimum investment is higher, but that is also changing. And when we talk about minimum investment for gold mutual funds, you can start for as low as 500 rupees. Liquidity of gold ETF will depend on the number of buyers available in the market, but it usually isn't a problem when you are looking to sell it. However, liquidity becomes much higher in a gold mutual fund because a mutual fund house is required to set aside some cash in case anyone wishes to withdraw. So I'd say gold ETF has moderate liquidity and gold mutual fund has a high liquidity. Exit load. If you have invested in any mutual fund, you must be knowing there's something called exit load, which is a kind of penalty if you withdraw your money within a certain time frame. So you'll see an exit load in only gold mutual funds and not gold ETFs, and this can go up to 1 or 2%. Expense ratio. Expense ratio is a fee you pay to a person who manages your money, and a gold ETF is a product launched by certain AMCs. For example, we just saw a Nippon Gold ETF. So if I want to invest my money in Nippon's Gold ETF, Nippon will be responsible for managing my money, and for that I will have to pay an expense ratio of up to 1% to Nippon. So usually in gold ETF, expense ratio will not go beyond 1%. But if you buy a gold mutual fund, you'll have to pay a little bit higher expense ratio because now there are 2 intermediaries in between. One AMC that is launching ETF and the other AMC that is launching a fund. So through that fund, your money will go to an ETF. So the expense ratio becomes greater. But in any case, it should not go beyond 1.5%. And there are good gold mutual funds which have 1%, 1.2%, 0.9% expense ratios. So brokerage on gold ETF will depend on your broker. If you are using Zerodha Upstocks, you won't have to pay any brokerage. It's free of cost. And in mutual fund app, there's no such thing called brokerage. So you won't have to pay brokerage while buying gold funds. Let's come to tax. Tax treatment of gold ETF and gold funds are same. There are 2 types of taxes. One is STCG and the other one is LTCG. STCG means short-term capital gain tax, which will occur when you sell your gold within 3 years of purchase. So that kind of profit becomes STCG, which will be added to your income and taxed according to your income tax slab. And if you sell your gold after 3 years of purchase, it will then become long-term capital gain tax, which will attract 20% tax plus 4% cess on that tax. But here you will get the benefit of indexation. Indexation will adjust your cost according to inflation and bring down your calculated profit so that you have to pay less tax on your less profit. Coming to loan, it might come as a bit of a bummer, but you cannot take a loan against your gold ETF or gold funds. Now the burning question that might be coming to your mind, whether or not can we get physical delivery of gold ETF or gold funds? So before answering that question, I would say if you are investing in gold ETF and you want physical delivery later on, the easiest process is to sell your ETF, get the cash out, and then go to a jeweler and buy physical gold. Because if you are looking to get physical delivery from ETF, you will need to hold units equivalent to creation unit size. What is creation unit size? It is usually 1000 units, and 1 unit is 1 gram of gold. That means you will need to hold at least 1 kg of gold. That is what? Around 50 lakh rupees? So if you do manage to hold 1 kg of ETF, you can then inform your depository, in Zerodha's case it is CDSL, to transfer your ETF to your fund house. That will mean you are selling your gold ETF to your fund house itself. And in exchange, your fund house will give you physical delivery of gold. For that, you will need to pay GST and any transportation costs that incur. And in case of gold funds, you don't have any option to get physical delivery. Now comes the burning question: which one is better, gold ETF or gold mutual fund? And I would say gold ETF is definitely a cheaper option because there's no exit load, there's very little expense ratio, and if I have Zerodha or any discount broker, there's no brokerage. But there's also no SIP option. What if I want to invest in gold on a monthly basis? So I would have to either switch to gold mutual fund or remember buying gold ETF every month. So if you want to make a disciplined investment in gold, I would say you can go with gold mutual fund. But if you want to save as much money as possible, then go with gold ETF. Now comes the second question: which gold ETF or which gold fund to invest in? For that, you must check the asset under management of every gold ETF. The ETF having higher asset under management will mean it has higher liquidity. If you want to sell in future, you won't have any problem doing so. So here's a list of gold ETFs with AUM in descending order. AUM means asset under management, and the highest asset under management is of Nippon Gold ETF. So as of now, if you want to invest in gold ETF, you can invest in Nippon's Gold Bs, and you need to search these exact codes for the appropriate AMC's Gold ETF. So that's it for Gold ETF and Gold funds. I hope to see you in my next video very soon. Hit that bell icon for notifications. Bye.